Hello friends, James Stevenson here with a special report courtesy of subscriber and listener and Twitter follower Dr. Gabe Wilson, who brought to my attention the Wall Street Journal article, Why Tesla's Stock Rally Doesn't Make Sense. So we'll go through that article and talk about it. I'll bring into the conversation my co-host Loki, who is enjoying his freshly laundered bed and blankets. We just throw all that stuff in the washing machine and the dryer and get it clean. I'm not sure he's a big fan of the scent of the dryer sheet. But it's time for breakfast with Loki, so let me grab breakfast for Loki. Yes. Okay. Here you go, little buddy. Here's your breakfast. Yes, and here's a little treat to get you started. Yes. There you go. Oh, what do you think? Pretty good. Alright, so we'll see if that convinces Loki to come over and try some of his breakfast. Let's share my desktop and show you how this tweet looked on Twitter. Now, I recently did an article about paywalls and how good news about Tesla gets hidden behind them sometimes. In this case, this is the Wall Street Journal. They've been paywalled for a long, long time, and they've put this article behind a paywall as well, but through the help of screenshots, courtesy of Dr. Gabe Wilson, we have this article to show you today. Why Tesla stock rally doesn't make sense in 8 charts. Well, if you have 8 charts, then obviously your conclusions must make sense, right? Let's click through these and start off the article. Now this looks like a lot of information here, but there's only 4 of these slides. So we'll do 4 slides, each one with 3 screen grabs of this article. Wall Street's focus has moved from Tesla's price cuts to a more distant future of driverless vehicles. It may shift again, is the subtitle to this article, with just a caption on a photo of some superchargers here saying Ford and GM have signed deals to use Tesla's supercharger network. Article by Stephen Wilmot, June 20th. And we're already through the first of these screen grabs. Let's see what else we have here. There are a lot of theories for why Tesla's market value has increased by about $250 billion over the past month. You have to go far down the list to find the thing investors usually pay most attention to, the foreseeable outlook for profit. Well, yeah, investors are paying for earnings growth. That's what investors want. Let's see if I can get Loki interested in another piece of combo here. Yes, there's more in here, buddy. Keep going. We'll see if he eats or not. If he wants to eat, he'll eat now. If he wants to eat later, he'll eat later. Okay, even by Tesla standards, the recent rally has been dizzying. The stock will open after the long weekend above $260, a level last seen in September before a disappointing third quarter update started a run of bad news. One commonly cited explanation is artificial intelligence. A record-breaking 13-day streak of gains in Tesla stock started about the same time. Chipmaker NVIDIA gave a punchy sales forecast based on booming demand for AI applications. Marco Iacchini, Senior Vice President at Vanda Research, which analyzes investor flows, points out that small shareholders have bought into Tesla and the AI theme at broadly similar times over the past year. Okay, so maybe it's just an AI rally and people think Tesla is an AI company, so that's what accounts for the rally. We think the market wants to believe Tesla is an AI name first, an auto company second, Morgan Stanley analyst Adam Jonas wrote last week. Although the latest AI hopes have been focused on the large language models that power ChatGPT, some investors appear to see a read across to driverless cars. RBC analyst Tom Narayan published a note last week with a new valuation methodology that attributed little value to Tesla's car-making business, but a lot to its promise of robotaxis, in quotes. Driverless vehicles for hire that one day might replace some cases of car ownership. This isn't a new idea, but it is getting fresh attention. All right, so we've got a chart here. The first couple of slides also had charts. I guess we should talk about those. Tesla stock price. Okay, it's a stock price chart. Peak in November 2021. You know, bad economy throughout 22 and 23. Bear market, right? Tesla's a high beta stock, so it's going to fall more than the average stock does during a bear market decline. Bottoming here at the beginning of 2023 and rising since. Okay, then this one says net purchases from retail investors, 10-day moving average. So NVIDIA and the AI basket, top 5 holdings, NVIDIA, Amazon, C3, Microsoft, Alphabet. All right. As Loki dives in to his food, good boy. All right, so these went up together at the same time, is all that chart says. What's this chart say? If you can figure it out, let me know, because it appears to show a $1 billion valuation target from RBC. That makes no sense at all to me. Tesla is worth many hundreds of billions of dollars in market cap. So to say only one of those billions is from robotaxis seems like not enough valuation to me. I don't know how anybody can value the total market at 0.9 billion. Does that make any sense to anybody? If these were in trillions, maybe that would make sense. Maybe it is, and it's just labeled wrong. I don't know. If you can explain what's happening with this chart, let me know. Okay, pinning hopes on Tesla robotaxis today requires a double leap of faith because the technology is at an experimental stage and Tesla isn't even among the most visible experimenters. Really? Who's among the most visible experimenters with autonomous driving if Tesla isn't one of them? Who are the most obvious, the most visible experimenters? While Chief Executive Officer Elon Musk has talked about robotaxis, Alphabet's Waymo and GM's Cruise already operate fleets of them in cities including San Francisco and Phoenix, albeit in limited areas and conditions. Well, that's the kicker at the end, isn't it? So, as usual, Waymo and Cruise are being praised for actually having driverless robotaxis in tiny areas, right? Loki, did you eat all your food? You did. You're a good boy. All right, let's get you a treat. Let's get you a treat. Yes, good boy. Good boy. Well, if nothing else was accomplished during this video, we did get to see Loki eat his breakfast. Alright, so I'll return the Loki cam to its rightful place of prominence. I might even put some more height on it here, so we can angle it down a little bit and make sure we keep a really good angle on Loki there as he finishes his snack and then inevitably curls up to nap off breakfast. Okay, I was here talking about Waymo and Cruise when Loki finished his breakfast. Yeah, so if you are in Chandler, Arizona, and if you want to go somewhere else that's in Chandler, Arizona, Waymo has a solution for you. If you're in San Francisco and you want to be somewhere else in San Francisco city limits, probably Waymo can drive you from one of those San Francisco greater metro area, really just the city limits of San Francisco, not even the greater. Like if you want to cross the Bay Bridge, you're out of luck. There are no options for you to go to Oakland in an autonomous vehicle because there are no companies that offer that service, right? If you have a Tesla, you can press the right steering wheel button and say, navigate to anywhere you're going, and your Tesla, equipped with FSD, will attempt to drive you all the way to your destination, whether that destination is in Chandler, Arizona, or San Francisco, California, or not. If I had a pie chart of all the use cases, all the origin and destination locations real people really use in the real world, guess how big the slice would be of people who want to have a car drive them from one place in Chandler, Arizona to another place in Chandler, Arizona, or from one place in San Francisco to another place in San Francisco. Are you getting it? Geofencing is not the solution. You're not going to exhaustively, high-definition map the world because the world changes all the time, right? So these LiDAR-based, geofenced, cordoned-off solutions are not broad enough to solve autonomy for most of the people in the world, for most of the driving they want done. All right. GM and Alphabet have moved forward with understandable caution. A mangled line from ChatGPT may not have big consequences, but a stray robotaxi would. Uber found this out the hard way when one of its test vehicles hit a pedestrian in 2018, triggering a sector downturn. Slow progress has made the business very expensive. Cruise burned through $1.8 billion of cash last year, so maybe the approach they're taking isn't as smart as the approach Tesla is taking to gather millions upon millions of real-world driving miles of data to feed its neural net to improve its self-driving. Full self-driving, wherever robotaxis are on their uncertain road to mass adoption. They offer a problematic explanation for the latest Tesla rally. Over the past month, GM has underperformed Ford, which doesn't have a business like Cruise, while Alphabet stock is broadly flat. Alright, so this author just has no idea what's going on with this theory. Share price performance of robotaxi operators versus Tesla and Ford. Tesla has gone up by more than Ford or GM or Alphabet have since the beginning of May. Alright, so Tesla sees the potential to take drivers out of cars to create robotaxis as an extension of its existing driver assistance package, so-called full self-driving or FSD. This software offers another justification for the AI hopes swirling around the company. Alright, so this author has both advanced and then shot down the theory that it's robo-taxi companies in general being priced higher, because that's not really happening. Tesla now charges $15,000 for FSD, but doesn't book all the revenue because the product is still in testing or beta mode. After years of disappointment, its recognition of deferred revenue took a step up in the final quarter of last year when it made FSD more widely available, and it was also higher than usual in the first quarter. This could be a sign, albeit one open to manipulation, that the technology is finally working better. What's this talking about? As you roll out full self-driving features to more people, you're allowed to declare more of the revenue as being earned. Once Tesla has delivered all of the promised features for full self-driving to all of the buyers worldwide of the full self-driving package, they'll be able to declare all of the money they collected at time of delivery of those vehicles as revenue, and there won't be any more FSD deferred revenue. So this next chart is showing you how much deferred revenue Tesla has declared by quarter. So FSD wide release happened in Q4 of 2022. That's the quarter that had the most deferred revenue recognition. That makes sense. Still, putting a high value on FSD is problematic, even if its performance turns a corner. Is it? Cutting-edge technology in the car industry has historically commanded a sales premium only for limited periods before competitors catch up. There is no reason to think FSD, which allows drivers to take their hands off the wheel but not their eyes off the road, will be different. Many big car manufacturers have released or are close to releasing something similar. Well, I'm out at this point in this article because Stephen Wilmot has revealed he has no clue what he's talking about. I had to circle in a big red oval that last sentence because it's so shockingly dumb. I mean, you've got to really not understand the technical challenge of full self-driving to write that sentence and say, yeah, that looks good, we'll publish that in the Wall Street Journal. I'm going to read it again. Many big car manufacturers have released or are close to releasing something similar. You don't know what something similar is if you can write that sentence and think that it's good to publish like that. Try driving a Tesla that has full self-driving, input a destination, and then let it take you, and then go try any other driver assistance system from any other manufacturer selling you any other car currently on the market, right? So if you go get into a Cadillac that has Blue Cruise on it, you'll learn quickly that it's not even going to turn on at all unless you're on one of the interstates that it has pre-programmed in with high-definition LiDAR mapping. If it doesn't recognize the lane that it's already in as being one of the lanes of an interstate that has been pre-mapped by Blue Cruise, it's not going to turn on at all. And then as soon as you exit one of the areas that are pre-mapped, it's going to turn itself off and return control to you. That doesn't happen in a Tesla. Teslas are general purpose solutions. These other driver assistance packages, a lot of them are highway only, lane keeping assist only packages. They are not making unprotected left turns. They're not stopping at stop signs for you. They are not going on green lights for you. They're a long way off from where Tesla already is, and if you think they can just catch up really quickly, it contradicts the point you made in the previous article that, or in the previous paragraph or whatever, where you're saying FSD is this huge challenge that nobody may ever figure out. All right, well, make up your mind. Which one is it? Is it so easy that everybody's going to figure it out soon? Or is it so hard that maybe nobody's ever going to get it? Or is there another explanation? Is it that only those companies that have a strategy that will give them all of the real-world driving data they need to train a neural net large enough to achieve full self-driving to a high degree of proficiency that will succeed in the near term in delivering full self-driving solutions? That's the one Elon Musk would sign on to. If I said it the way I was thinking in my head, I think I got that out right. Leaving aside AI, the deals Ford and GM have signed to use Tesla's supercharger network coincide with the latest rally. They should help Tesla wring better returns of its fixed assets. All right, so he meant to phrase this some other way, but this is the quality of the Wall Street Journal these days. But the response seems disproportionate. Investors never really warmed to independent charging network builders such as EVgo, given the capital intensity of their rapid growth. Suddenly seeing huge profit potential in Tesla's charging business smacks of cognitive dissonance. All right, so the point of this paragraph is, hey, is EV charging that profitable an endeavor in the first place? And it's kind of missing the point, which is Tesla created a charging standard that Ford and GM have now signed on to, saying, yes, this is the best technology available, not the design by committee, CCS, or, the other options that are available, CHAdeMO, or whatever, the dumb ones. People are signing on to Tesla's supercharging standard. They're going to build that into future generations of their EVs. Not that they've made that many EVs yet. They haven't really made that many, Ford or GM combined, unless you count discontinued models like the Bolt EV or EUV. So this is a stock chart of EVgo's stock price. So they peaked back in 2021 and have fallen since their SPAC merger. All these threads can be woven together to depict Tesla as a technology ecosystem with multiple revenue streams, rather than as a car maker. Tech analyst Dan Ives of Wedbush Securities wrote an AWS moment for Tesla, referring to the emergence of Amazon.com's cloud computing business from the shadow of its financially less attractive internet retailer. Such comparisons, while thought-provoking, are by nature imprecise. Tesla has interesting sidelines in charging and insurance, but mostly accounted for in its service division, and energy storage, which has been growing very fast recently, but nothing seems likely to generate revenues on anything like the scale of Tesla's car sales in the foreseeable future. Well, it depends on how long you think the foreseeable future is. If you mean this year or next year, yeah, automotive is going to continue to be the number one source of Tesla's revenue. But energy is going to grow. Services is going to grow. I don't think services is going to be as big as automotive for a decade at least, maybe longer. Energy, there's a lot of market out there for energy. It's going to depend on how well Tesla can scale up battery production. If they can dominate the market for Megapack XL and similar solutions for utility scale grid storage, as more and more power companies transition to sustainable energy sources like wind. The wind doesn't blow all the time, and solar, the sun doesn't shine all the time, so you're going to need batteries. That could be a really large and profitable market for Tesla, especially if nobody else wants to scale up and deliver a lot of those products to the market. So I guess I agree. In the near term, automotive will remain the number one source of Tesla's revenue by far. But Tesla's working on other stuff too, not all of which I see mentioned in this article. While much of the latest street chatter once again recasts Tesla as a tech giant, there are more down-to-earth explanations for the recent rally. Ben Rose, an analyst at Battle Road Research, points out that it started when Musk appointed a new CEO at Twitter, alleviating worries about his getting distracted by the social media platform he bought last year. So this is the Twitter overhang lift theory. Tesla also updated its website this month to show that all its vehicles qualify for the full U.S. tax credit, which depends on complex battery sourcing requirements. Previously, most of its models only got half the $7,500 subsidy. That's not even true. Previously, most of Tesla's models did qualify for the full $7,500 subsidy, and only certain trims of Model 3 didn't qualify. Now they all do. This change, which presumably reflects supply chain adjustments, could help keep the company on its growth path without further price and margin cuts. If second quarter earnings show signs of stabilization, analysts could start to increase earnings forecasts that they have spent the past 6 months or so cutting. Yes, we've seen some Tesla downgrades from analysts pretty recently. So yeah, if the second quarter earnings look a lot better than the analysts think they're going to, that could reverse and see some price target increases, which typically would see a stock rally follow. If that's what most of the analysts are doing, raising price targets, then the price would follow. That's typically what you see anyhow. I mean, the stock market is unpredictable by design, on purpose. It's hard to explain the daily movement of any stock's price up or down, aside from breaking news that the market did not previously have. So that's mostly what people point to when there's a stock rally is, okay, what was the news? Okay, that must have been it. But The stock market is enigmatic because if you could predict it well, you would build a trading algorithm. You being, a huge Wall Street investment firm that has black box trading algorithms. If you could figure out what was going to happen next with stock prices, you would build that logic into the code of your trading bots, and then that would remove that dynamic from the market. And then you'd be back at a point again of unpredictability on an hour by hour, day by day, week by week basis. It's very difficult to predict what's going to happen with the stock market because everyone is trying to at the same time. And all of them are arbitraging out of the market what you can predict. All right, what do we have next? Distant hopes have a long history of trumping such fundamentals and determining the direction of Tesla's stock price, making it notoriously difficult to call. But second quarter sales and earnings next month could refocus minds on how things look in the more immediate future. Whether the news is good or bad, it is likely to bring a reminder that Tesla still depends overwhelmingly on selling vehicle hardware and will do for many years to come. And then I put over here the last paragraph. After all the AI hopes, don't be too shocked. Write to Stephen Wilmot at stephen.wilmot@wsj.com. So somebody wrote to stephen.wilmot@wsj.com right here in a reply, and it was the aforementioned Dr. Gabe Wilson who commented, "You write, many big car manufacturers have released or are close to releasing something similar." The same paragraph I circled in red in the article. So you can get into any car other than a Tesla anywhere in the US and it will drive you door to door today without oversight? Not even close. There's nothing that does that except a Tesla. How about real world data? Tesla has, at a minimum, 100 times more real world data than any other company, and its lead is growing. So if you're Waymo or Cruise or whatever other ones he listed in his article, how much data are you collecting? You're only collecting the data from your own privately owned fleet of vehicles, and that's a cost to you. It costs you money. Every time you make one more vehicle to go collect more data, you lose more money having deployed that vehicle and then having to do the analysis and the data. That's costing you more and increasing the size of the loss you're going to report. Tesla's strategy is sustainable. Unsurprisingly, Elon Musk thought through the problem and said, hey, let's put all the hardware necessary for full self-driving in our cars. Back in Q4 of 2016, since October 2016, every Tesla has had at least hardware 2 or better. And most of those vehicles are now hardware 2.5 with the FSD chip in them as well. So all that data is being collected by Tesla and added to their industry-leading stockpile of real-world driving data for Ashok Elaswamy and his team at Tesla FSD to analyze and to improve their driving algorithm. Do you actually use and get to know this technology before you write seemingly authoritative articles about it? So a really good reply from Gabe Wilson there. I haven't left a reply on this article. I thought that was a pretty good one. But I do have some questions to leave you and Stephen Wilmot with. What do you think? You can leave me comments in the replies below if you want. Is Tesla an AI company? Elon Musk says it is. I don't know if I want to lead the witness that much by saying so. But we've seen tweets before from Elon verifying that Tesla is an AI company. Will Tesla solve FSD? Is this an intractable problem? Is there no way it can be solved? On a long enough timeline, does it get solved ever? Some people think it gets solved pretty soon. Who will offer the first go-anywhere robotaxis? If you had to guess, which of the companies currently exploring the idea of having robotaxis will be the first to offer robotaxis that can go from wherever you are to wherever you want to go. Is Tesla's North American charging standard victory a big deal? Victory being GM, Ford, and now Rivian have all agreed to adopt Tesla's charging standard. Was the rally just the Twitter overhang lifting? Does that make sense to you? That Twitter gets a CEO, and so Tesla's stock price rises by a few $100 billion. Does that seem proportionate in magnitude? Is Tesla just a car company? Is the only thing Tesla's working on cars? Is Tesla innovating in other ways? Does Tesla have other avenues for growth and future product lines besides vehicles? Or is Stephen Wilmot unaware of something important? Does it matter which companies are attracting the best engineering talent in the world? Does it matter which companies have a culture supporting innovation? Are those important to the future, or is Tesla just a car company? I will leave you with those thoughts, and so will my co-host, Loki, who has curled up in bed after consuming his breakfast, as you saw earlier. And my parting thoughts are that if you've enjoyed this video, click the like button. It's always free to click the like button. If you're watching this video on YouTube, you can click the subscribe button. It's free to subscribe to my channel on YouTube. If you feel like supporting me, if you think that I've earned your trust, you can subscribe to me on Patreon, or my preference would be to subscribe to me on Twitter, where you can also get access to my subscriber-only tweets. But thank you to everyone who supports me in those places, as well as on YouTube, where you can subscribe by joining my channel, as my two executive producers, Kathy Kitchler and Rebellionaire.com, did at the top tier, earning them shout-outs and thank yous at the end of every video. And I'll see you in the next one.